So sorry, for the sake of, I've just forgotten the video, so I'll just turn the video on, and for the sake of the video, this is the weekly gold. So huge trend line, popped above it and immediately dipped down underneath it. So I'm looking for some lower levels here. On the question of Elliott, we've had 1, 2, 3. So wave 4 could take us back around about the 1250 mark, possibly lower, and wave 5 could take us up here, back up to this resistance, and that would figure nicely, that would work out nicely with the 200 moving average coming down here, to cradle the 200 EMA and then potentially creep back up to these highs. So I would, bear with me 1 minute. Let me just stop recording. The other speaker is struggling to get in. Hang on. Sorry, we're all in now. So we're going to just talk about the basic charts first, and then we're going to talk about the dollar and the pound and the relationship with the market. So I'm looking for this gold to come down to, I think we could come down to 1245. That's a major level there. You can see the stochastic is very high. So I am hoping, but no inflation this week. The main issue is with the ECB. That's the big part of the week. We'll just go through the data in a minute, but yeah, so just looking for this to topple over and then see if we can get a lift up to there, and then that will create the 3-wave pattern. I love these 3-wave reversals. I want this to drop into the 3rd wave and then give us the lift. See many examples of how that 3-wave works, and so I would look for that. The monthly is, bear in mind, we're only a week off of the close of this monthly bar. Yeah, that's 1292 is the major resistance, and that's so far, yeah, that's pretty much what we've come off. So let's just see if that can work. Quickly flicking across to oil. Let's keep tabs of what oil's doing. Oil's had a tough couple of weeks, a tough month in fact. We had a spinning top on last month's bar. 47 area is a possibility. We're coming into this, the lower part of this apex. And you can see on the daily chart, let's look at the daily. So I fully expect this to drop down to at least 48.50, 48. We're just not holding. We look as if, I know we've got the OPEC meeting coming up, but your pure technicals, forget fundamentals for the moment. Pure technicals suggests that we might find a footing on that 48 area. Let's just keep an eye out for that one as well. Quick look at the main forex pairs. So these gaps, we have not closed the gaps. I'll show you the pound yen and how I've got my fibs aligned for this. This one is a gap fill at 946. That's the most likely area that will come down to. The full sort of support on the weekly is around about the 900 mark, so it could come down as low as 900, which is only 80 pips. So on this monthly chart was suggesting that this was too expensive anyway. So I think after this exuberance, I think the sense would prevail. Well, it's not about sense, it's about gaps. I don't. At some stage, these gaps are going to fill, and it could be hours more, could be days more, it could be a week or two or more. So, we just don't know when these gaps are going to fill, but fill they will. You can see, let's look at a gap here on this weekly chart. We gapped up here in July last year. There seems to be some sort of gap here from July. So we held like we ran up further into resistance and then filled it in late July. So the gap opened up in mid-July and closed a couple of weeks later. I did find a better one. I'm trying to think what was I looking at on these main charts. It's different with stocks. It's unusual in these very high volume markets, but these are unusual times. Let's look at the pound yen. I've been buying dips into this, and there is a detectable gap fill here if you take into account the high from Thursday. But the main weekly gap fill would be right down there at 974, 972. It was a nice, look at the 15 minutes. This is the one that I was looking at. This is the fibs on the gap. So I've taken the high of last night, the Asian session, taken the close of Friday, fibbed it, and you can see we pushed into this area here, which was the original Sunday sell zone, dropped back to the bottom of there's the main zone. The 30 was the main lower part of the zone, so I started buying at 30, and here we are at 43. Looking as if we could come back to 100. Not looking for a big move here. I just happened to just dip into it. I still think that we've still got this intra-week gap here. So like I said, I wasn't looking for a big move. I'll test it out, see if it holds, see if it pushes back in 141. Otherwise, just not looking for that to be a big move at this stage. Okay, so that's how I set the fibs up on that one. Quick look at the DAX. Let's finish off with Forex first, and then we'll look at a bit close on the DAX and the indices. Right, so pound US. This is a gap fill, or I don't know. This is gapped. This is closed. This is probably the only mainstream chart that's done a neat gap fill. So we didn't have a particularly large gap up. If you look at the fibs on Friday, we gapped up into 127 extension, closed the gap in the Asian period, ran up to resistance, ran up to Friday's high during the Euro and the early US session, and here we are coming back to the bottom of the zone, creeping up and struggling. Basically, we're struggling there. Okay, so I said in the Skype room, this was probably the best behaved mainstream chart, and that's the reason why, because we got a lovely sell on last Friday's high, and we stuck rigidly with the bottom of the fib zone. Whereas some of the other charts didn't do that. I expected the DAX to do it, and it just kept going. Incredible chart on the DAX today. I was originally I did the same process as I did with the Forex charts on this one. And this came down to 50% in the end of the Asian period, started closing higher. I started looking for shorts, can't remember where now. I was looking for shorts in this as we started rising up here, and we just kept going. So messed that one up, because if you looked at the 5-minute chart, that gave us our typical range move today on the 5-minute chart. There's the range, held it at 8:30 and just would refuse to die. So this is the gap fill on this one. So look at the hourly. So even if you look at Friday's highs, we are 370 pips away from a gap fill there. So extraordinary chart, not looking to play the game. And the Forex is just looking good. Yeah, so the other reason why I liked the pound yen is the way it's sitting on. It dipped underneath last week's high and held. Put a little hammer-like bar here at 6 o'clock, and has since just come popping back into resistance at the moment. Okay, so let's have a look. Let's have a look at the euro, and then we'll move on quickly. Okay, so we've still got a hefty gap on this one as well. I suppose you could suggest that 780 will be a gap fill on this one. That's Friday's high, but the official market close was 730, and the 4 o'clock close that day was, let me find it. Okay, so the 4 o'clock close was 760. So a push back to 760, let me mark that, would be a nice place to get long on that one. Let's mark it at let's mark 750. So I would very much look forward to, let's do it a different color. Love to see a push back into that. Yeah, market hates gaps. Doesn't matter what you're trading, whether it's Forex, commodities or stocks, the market generally hates gaps. And so gap strategies are key to this. So 880 might be a selling level, and 750 could be a potential buy area. You can see on this monthly chart, we are just coming into the 20 moving average as well. Right. So as far as data is concerned this week, I'll just summarize my plan before we move on to the main theme. The data this week, public sector borrowing tomorrow for the pound, consumer confidence for the US in the afternoon. Then we've got Wednesday is the Aussies day for inflation. CAD core retail sales. I'll be looking at the CAD on a gap fill, and Thursday is the big day because we've got Bank of Japan monthly report, and then of course the euro rate. So of course at this stage nobody's expecting the ECB to raise rates, but what I am going to bend my ear for is any mentioning of tapering. I think the ECB are in danger of really pushing it too much if they don't start tapering in the coming months, not weeks or days, but certainly the coming months. Core durable goods, and then Friday's pretty quiet. Oh, we've got preliminary GDP and CAD GDP. So CAD, I'd be interested in the CAD. I need to do a closer examination of CAD. Okay, so ECB is going to be crucial. So let's get a pullback. Let's come and test this 730, 750 area, and then get on with it. Get on with the push back into pre-election levels, potentially. Longer term, before I come out of this, longer term, I talked about this big channel in the euro. So that's what I've got my eyes on. If we can close that gap and hold that, then I would want to see if we can really get going and potentially come back to 120. If we can come out of this apex and pull higher. Let's just relate that to the DAX as well. Weekly DAX. So we've made new highs on this, and at this stage, looking high. We are into trendline resistance, and there's the bottom of the channel. That's why I tried to short this, because we are so extended, but it didn't work. So stay tuned, because that is not giving up anything at the moment. So we'll have to wait on that. Right, okay, so yeah, Graham's just, I don't know if you guys can you guys read that? Yeah, it's to everyone, isn't it? We got the tax reform that Trump promised as part of his election pledge, looking as if that might come to the boil this week. So that at the moment is keeping the markets nice and high. The Dow was on day trading. The Dow was a little odd, stayed in that range for a long time and has not broken out significantly till literally just now. So now we pull back. If you're trading this, if this was the main active session, then I would suggest you might want to try and buy 775 here, neatly off the 200 simple moving average there. Often a key indicator. Right, let's get going. Graham, I was going to give you the microphone so that you can introduce this. Can you hear us okay?
Hello.
Yep, that's nice and clear.
Oh, good. Good evening. Yeah, I was talking to Mike a couple of days ago, and we were just talking about the market. And I think one of the things that struck me, and looking at in particular my SIP account, was just how much it was some of the stocks, energy stocks in particular, were affected by the sharp rise in the pound when Theresa May mentioned the forthcoming election. And in the past, I have on my Twitter account posted a few messages about the strength of the US dollar and the weakness of the pound, and that one day when this starts to reverse, grown men will cry. And I think if you look at some of the stocks, and I also posted in the room a little while ago a comparison of BP in dollar terms versus BP in GBP terms. And if you look at the key date of the Brexit vote, you can see a significant difference in the performance of BP in dollar terms versus BP in pound terms. Now, I'm probably not telling anybody anything they didn't already know, but these things slip off the radar, they go to the back of the burner. And of course, then when you get a day like we had the other day with the Theresa May announcement and the election announcement, it suddenly comes home and it refocuses the mind about what's going on. So for my part, I actually sold all of my UK energy holdings a day too late after the market had done what it'd done. But I really foresee I think the pound will go higher. I can't tell you when, but I think it will go higher. And that's going to have an adverse effect on all of those companies that have a high proportion of their income and earnings in US dollars. And the obvious candidates there are the energy companies, the energy services, the field services companies. Names escape me, but you can look those up. There are other companies that have a lot of international sales, like AstraZeneca, for example. Burberry must have a lot of income in non-sterling terms. And if you look at some of these stocks, particularly on the longer time frame charts, or 1 month and 1 week charts, you can see what's gone on. And then if you then actually look at those stocks, if they're quoted on the US market as well, you can see quite a stark difference. So it's the thought really was that, faced with a stronger pound, and I think if Theresa May gets the election result that she thinks she's going to get, it will strengthen her hand at Europe, and I think that will possibly give us who knows, but I think it will end up with the pound being stronger again. So, all of those stocks and assets that are quoted in that have these high US dollar incomes are going to take a hit. And on the FTSE 250, there was a couple of stocks that I've been watching and wished I'd been in. The tickers TEM and BTEM. There's a couple of others, for example, that invest overseas. But basically, they're affected adversely or positively, depending on which side you are, by the pound. So it's really a case of, what to do. Certainly in the UK, stock-wise, I mean, I use the IG Spread Bet platform, not very much. I use it, I suppose, truth be known, more for research than actual trading. So when I look at things like my pension portfolio and stock portfolio, I've limited scope to short stocks, and I can't do forex in the SIP, so I couldn't short the pound dollar, for example, to hedge against a rising pound and try and protect the positions of some of the stocks, whilst also at the same time trying to enjoy the dividends that some of these things produce. So that was kind of like the discussion I was having with Mike, and we thought we would go through some charts of some of these stocks, and if anybody's got any comments, please do let us know. So Mike, I don't know if you want to have a look at BP just to kick things off. Yeah. Are you able to look at BP US and BP UK?
I think so. This is UK. I think the most significant thing on this, and this is very, it's a good, by UK standards, it's nice and liquid, and you can see really technical fib sell in the ambush zone up there at 520.
Yeah, I think you might see it better on a weekly for just the
Okay.
particularly that June. Oh gosh, what was it? June 23rd last year, the referendum,
Yeah,
which was the
yeah,
Thursday. Friday was like everybody's thinking day, and then things really started to move on the on after the weekend on the Monday and the Tuesday.
yeah. So where are we? Hang on a second.
So June, end of June.
Yeah, so we get yeah. It was 23rd and 24th of June, wasn't it?
Yeah, Thursday the 23rd, I think.
Right. Okay. Well, this is the
Yeah,
week.
the result was on the 24th, the day after.
Yeah. Okay. So this is the week starting the 27th, wasn't it?
Yeah.
So we had a big push up whilst everybody was sort of picking themselves off the floor. So we didn't start to see any selling until middle of July, at which point we dropped back to a support zone, pulled up into January, and then hit these June 14 resistance levels.
I think the thing that I was getting at. I mean, if you take BP, if somebody's got BP in their pension fund, for example, they're going to tend to just to leave it there and forget about it because they're working Monday to Friday and
Mm.
don't sort of do the monitoring on the price action like you or I might. So they would have left it there. And if they looked at if you just compared where BP was at the end of June to where it is now in sterling terms, it's still quite a bit higher. Whereas in dollar terms, I think it's about the same, if not a tad lower. And RDSB is another one that's basically it's done the same thing.
I tell you what, let's just momentarily flip between this and the pound.
Yeah, pound dollar.
Yeah, and see what.
Yeah.
Um, yeah, it's
It was an inverse.
it's an inverse. Yeah. Let me see if I can get the US one up here. Yeah, that's the US one. So that's much more a narrow move, isn't it?
Yeah.
Okay. But the UK one is actually nice and technical, isn't it? It's yeah, it's reacting very, very well to the monthly fibs here.
Yeah, the US one is more correlated to the oil price,
Yeah,
whereas the UK one has got the added complexity of the exchange rate on top.
yeah. Okay, so we've had this big push up in the pound last week, and here's the corresponding weekly bar on this BP. So if we got the scenario of, it doesn't matter who wins the election, but if we've got the scenario of the pound getting a lot stronger, we could easily be looking at the £4 mark, couldn't we?
Yeah, I think is it 380? I think that sort of lump of consolidation there centered around 2016, the start of the year.
Yeah.
Is that about 380? Because I think that's where it was post the Brexit result.
380. Yeah, you're right. You're right. Yeah,
380.
384 £4 is roughly the pre-Brexit breakup.
Yeah. And I think the other thing that surprised me about the move of this stock upon the news of the UK election was just how much of it almost seemed like it was a more significant hit effect on the stock the due to the currency move than was the effect of the move in the oil price.
Yeah, yeah. Because we now compare
And it was just thinking big picture. We try to make a penny here, a penny there. Yet you could be staring. I mean, where's BP today? Oh, I forgot.
I've got, well, on the UK market, I've got pretty much 450, just under 450.
So you could be staring a sort of a 50 to 70 pence loss.
Yeah.
On the stock over, perhaps not a too long a distance time frame from now. And most people that are certainly running BP in their pension funds hold BP basically because it's the biggest dividend payer, and so it pays what does it pay, about 8%. So what's that, 4 8 30? It's paying about 25-30 pence a year, I think, from memory.
What's the dividend date for this one? Have you got that? Do you know that?
Yeah, I normally put it on my chart actually. Hang on, let me just pull it up. BP. Typically I've not marked it off for a while.
Don't worry.
Go to investor relations, it'll be there. But it pays 4 dividends a year, so it's spitting out dividends fairly frequently.
Okay. But if we now
the point is that you could be giving away a whole year's worth of dividends or more if the pound gets a kick to the upside.
Also, I think look what happened at 2015 in this one. I know it's got history, but when was the big the Gulf spill?
Oh yeah, you're there. The Macondo well, that's it there.
April 15.
Oh,
it was before that, wasn't it?
Yes, it's that. I think it's that first one. Yeah, because it came down, recovered a bit, and then had another crash, didn't it?
Was it middle of 14?
When all the litigation looked like it was going to terminate the company.
Yeah. Anyway, but my point was, we had this big slide here.
Yeah.
And at the moment, we're coming off this big resistance. We could see that would sort of have symmetry from this period in 15.
Yeah. But I think if you look at the general trend from Brexit to where it is now, there are other stocks that have done similar. I think AstraZeneca's another one because it has a lot of dollar income.
Okay. Let me just call that up now. Yeah, it's a pretty similar looking chart, really, isn't it?
Yeah.
With the coming under pressure last week, obviously found some buyers at support. There's probably a lot of people closing their trades at the end of the week. This little bounce, well, plus the usual sort of market. It's just joined the relief rally we've had today, anyway. But yeah.
Yeah, there's I can't remember the ticker. There's an Irish building supplies products firm. I've forgotten the bloody ticker, but I'm just trying to find it now. That's had a huge rise with dollar strength because they do a lot of business in the States.
Right.
Typically, I can't find the ticker. Nuisance.
I did notice, on my sort of scanning today, I did notice that one impact of this is the retailers and the building industry as well, because the building industry.
Yeah, CRH.
CRH. That's great. No, I know that one.
CRH.
In the UK.
Yeah.
Oh, okay, Ireland. Yeah. Wow. Yeah.
Yeah, that's if you look at, I mean, it was doing pretty well anyway, but they have a lot of, well, they got a UK business, but they got a fairly sizable dollar income, I believe.
Right.
So that's done quite well, and it took a hit the other day, and has since recovered.
Yeah, let's just run through a couple of building stocks, because I think the other thing the other big factor for me that's really sort of a bit of an elephant in the room. Well, it's not an elephant in the room, but this market is suffering the sort of effects of TINA. It's a term you've used before, Graham, isn't it? There literally is no other alternative because it's a low rate environment. But that low rate environment, for that to continue, is dependent on inflation. And at the moment, we've got inflation creeping in, which is really already beginning to hit the UK consumer. We're a consumer economy, so one of the things I've been looking at in recent weeks, but particularly on my scan over the weekend today, is the potential outcome of that issue. And I talk about housing off and on now and again, and a lot of the housing stocks are in potentially a nice shortable position. Let me pick one up.
Persimmon.
Yeah, what's that? PS.
Is it PSN?
Hang on, I'll find it. I should know this. PSN, yeah, you're right.
Mind you, they have had good results as well.
Yeah, that's quite a good-looking chart, but I found some of the others are are looking much more precarious. The guys that are exposed to London are, I think, looking quite hazardous. Let's look at BDEV. Barrett's. That is quite a nice star on this weekly on this one. At the moment, we just jumped up on this relief rally, but I think this is a bit precarious. These guys. I think they,
Well, the housing news this morning, or was it a Halifax Building Society? There's been a 1.5% drop in house prices.
Yeah.
I don't know if that was across the land or whether that was London.
But I think we're at least due a pullback in the housing market. I'm not suggesting every, that there's going to be a horrible collapse. In fact, I was talking to somebody. I visited somebody over Easter who had quite a nice house, not far from Newgram, and it took them 3 years to sell it.
Really?
Now they're in Cudham, so obviously it's not great for commuters. It's a little bit, it's a bit more in the Kent countryside, et cetera. But they dropped the price 2 or 3 times, and she was saying to me that the estate agents were blocking her from viewing houses because she was in a chain. But they literally were, the estate agents saying, if you're in a chain, if you're not a cash buyer, I'm not showing you this house. But also what was happening was a lot of chains were just falling over. She had about 3 chains that fell over in that period. And okay, I mean, this could well be an isolated incident, but her sort of take on it was that things were it was a different market out there. And with people feeling the pinch, wage inflation fairly tame, I think these guys who've got exposure to London are possible short targets.
Yeah.
And if you look at the fibs on this weekly, I've pulled up a few charts in this industry like this. Of course, they're suffering from inflation. Now, this is a perfect short for me. This is a good bear raid for me because you're in the ambush zone. You're right in the ambush zone there. So
I just need to step away for 20 seconds. Hold
okay.
on.
So this sold very, very nicely here in May last year. And all we've done is struggle to get back to that top of that zone with the potential for that to come out of that funnel. So I think that is that's quite a nice one. Let me pull up 1 or 2 others as well. What have I got here? I've got BEZ.
Your computer is not working. It keeps shutting off the internet when it says it's unable. I turn it off and I get it again. I have to log on. No, your one.
I've got Beasley.
I'm back, Mike.
Hi. Now, let me just talking about the Elliott wave on. Is it Barrett's I was looking at? Yeah, so I'm just doing the same thing with Beasley. I think a lot of these guys who are in the London market could get caught napping. Really, I think this one's potentially a weaker chart. This one's already gap down here in March, and okay, it's popped up on the relief rally, but only right into resistance or close to resistance. So I am getting ready to short some of these guys. I was talking ages ago. I was talking about Galliford's, because I know these guys quite well from. Yeah, so this is already having problem. It had a problem up here at 158 or 1588, and look at this. We had a fairly bullish day today, and this has dropped. So this has got relative weakness for me. We've already got a monthly star, so I think we could come back to 10 potentially. If it gets going, could come back to 10 on this one.
Yeah, I think on something like that unless you're in it for a scalp, if you're looking to try and take a longer term position, is just do a ratio chart with the FTSE and see how it's comparing to the FTSE. Bearing in mind whether it's got a large currency piece as part of its makeup as well.
But let me just talk about. I quite like.
So one of the things we were talking about the other day, Mike, was trying to find stocks that might provide some kind of. I'll use the word hedge, but it's rather loose. But I was looking at EasyJet, and I took a small position in EasyJet because it seems to have. And I didn't do too much research into as to why it came off the boil so much, but I think there's a currency piece involved in that because it doesn't really have too much, if any, US dollar income. It has euros and pounds, I think, by and large. And
it's very much a European airline, isn't it?
Yeah. So as a bit of a hedge against the dollar, I bought some EasyJet, and on a small scale, it's certainly not losing money in the position at the moment.
Looks if it could potentially. Obviously, it's got problems in this just above it, hasn't it? It's got problems at this 12.
Yeah. But if you look at I see you got the monthly up there. I mean, definitely in the monthly. I'm a great MACD fan. It just definitely looks like it wants to not go down. You're right. There's no, and I think there's a dollar piece in there as well. That if the pound gets stronger against the dollar and other currencies, it will tend to do well. And it's also getting a bit of a kicker at the moment with presumably low oil prices.
If these guys know their stuff, and I'm sure they do, they would have been hedging like mad as oil was previously low and been low again. Yeah.
Yeah. I think IAG's done quite well as well.
IAG, what's?
That's the British Airways Spanish conglomerate.
Oh, International Consolidated Airline, right? Okay.
Yeah.
Yeah, so it's quite a similar story. Yeah.
Yeah.
Yeah, it dropped hard on Brexit last June, but it got snapped up at 3.39, and here we are at 5.70.
Yeah.
Yeah, that looks as if that's got it's gapped up today. That's had a great. That's not a bad little chart actually.
No, the other ones are the miners.
Yeah. Okay. Let's have a look at.
I mean, if you look at Fresno, which is gold and copper, or BHP, Rio, which are they have a large. Well, BHP's got oil in there as well, but I think Rio's more of a pure metal play. But I mean, they've had industry troubles, which I think if you look on the monthly chart, you think, oh my God, why didn't I invest in that?
Yeah.
Over the year, short it and then long it, and Glen. I mean, the iron ore's come off the boil recently by quite a bit, but equally, a significant, if not all, of their income is in. I mean, the commodities is priced in dollars, isn't it? So
Yeah.
they dig out of the ground, so they're basically dollar proxies in a way.
Yeah, it's had a good day. It's done a gap fill today. We gapped up on the 16th of March, and we literally just filled it today.
Yeah.
Pushed up off the 50%. It's had a good few months, isn't it? It's had a good year. It bottoms out in December, and it's done well. But yeah, got punished last week because of the pound.
Yeah.
Okay.
And what I notice, I find it more difficult to flick through the charts, looking at the moving averages and stuff. But certainly in the US, some of these big moving stocks that have the big moves like this, they tend to conform to some of the moving averages in the weekly and even in the monthly charts. It's almost like when you get a big move, the price action has gone off piste. So what reference point do the traders and the investing community have when they can't necessarily put pencil a value for the company without weeks of work down the line? Is that these things seem to get traded to sort of the 50, 100 and 200 MAs in the weeklies and the monthly.
Yeah.
They use this. I think in the US they tend to use the simple moving averages rather than the exponentials. But
that's what I got on here.
That isn't always the case. But it's with 2020 hindsight, when you look at some of these big price movements and some of this stuff, it all looks so obvious in hindsight.
Well, this is an interesting one, Barry, with this, on the same theme. This is Glencore.
Yeah.
I mean, looking at that chart, what would you expect on Glencore?
From now,
yeah,
moving forward, I think it's going to go sideways and end up forming like a sideways action band. But I think it needs to be. You'd need to fib it as well. You'd need to fib that big move. I mean, that big down movement on the left, that next big down movement from where you just started, that was the price of metal coming off, China not buying so much, plus Glencore itself had issues of potential solvency issues.
Right.
So they were selling assets like mad, and they've pulled themselves out of the bog, as it were, and are where they are now. And the market is
sort of what we're experiencing here now, though, looks a little bit like what we experience here. Really, I've lost my charts. Hang on, they closed me off because I've had them open.
Oh yeah, they do. Yeah.
Let me just. I don't know if it's saved what I was looking at or not. Bear with me 1 minute. Yeah, it's coming up for 8 o'clock. So what I was going to suggest is we just put forward a couple of trading ideas on these.
Yeah, I think just the theme that we were talking about the other day, and what we're trying to tease out this evening is that if you have got a pension pot or some investments in UK stocks at the moment, and you think you're doing really, really well, because it has all been a bit of a nice bull market, is be careful and keep an eye on some of these other things, because we can definitely see the impact on some of these stocks of the sudden jump in the pound. Was it last week?
Yeah.
Lost track of time. Last week.
It was last Tuesday. It just leapt up last Tuesday and spent the rest.
Yeah,
of the
I think it went from about 125 to 128, didn't it? In a 24-hour period.
It went to 129 and then dropped to, I think, lowest it's been since is just 127.50. I think.
Right. Okay. But you can see the impact of that on what might be your stock portfolio, and it's like, well, do you think the pound's going to be generally stronger moving forward or weaker, and try to legislate for that, really?
Yeah. But I would qualify that in a bit more detail, and I would say, yeah, I think it's an incredibly bullish market. The last thing I should be doing is suggesting you just get short everything, but I think you should at least consider a couple of.
Well, no, but the thing is, if you've got money in a SIP, and I think most people will probably have more money in their pension fund than, if they're a mere mortal like me, they've probably got a bigger pension fund than they have as a sort of discretionary investment portfolio, and it's just that something to keep an eye on, really.
Yeah,
and how can you take advantage of it if you spot an opportunity? Or just being aware of what's gone on, so that you can be aware of what a potential opportunity might be, and what you would do about it.
Yeah. Well, I'm just taking that one stage further and suggesting that I'm personally going to start dipping my toe on the and selling one or two of these housing guys. I think these are quite, one or two of these are quite bearish charts, and I'm looking to get short on sample some short positions and see if they start working out. Okay, may need to give this a bit more time, particularly to let this little relief rally sort itself out.
Yeah.
But obviously the £6. I'd be quite happy with this to overshoot £6 and then dip my toe in the water at that stage. Let it overshoot, get short nice and high, and then see if I can get confirmation in the weekly and the monthly.
I think just something else that springs to mind, sort of a bit of a tangent, really, is the Theresa May's announcement about the call for a general election on June the 8th was a binary event, which I think very few people saw coming. The result of that election, effectively, I was sort of thinking about it really as almost like a Brexit. It's potentially another Brexit binary event, the result. But what that will then lead into is her having a stronger hand at the negotiating table. So it'll be a bit of a drawn out affair. No doubt it'll be volatile, but it'll be a bit of a drawn out affair. But essentially, the UK being able to extract more favourable terms, or more so than it can at the moment. And then the other proper binary event that we've got coming up on May 7th is this next round in the French election.
Yeah.
I mean, everybody's, there's euphoria in the market today that Macron is favourite to win and is going to win. But, who knows what might happen?
I think the May election is, there's a lot of people, a lot of camps are assuming May's got it, but there's quite a concerted effort to on campaign strategy to try and block the Tories.
Yeah.
I saw an article on the Huffington Post today, and it was a spreadsheet with all the different voting areas and MPs, and they were suggesting a strategy to block the Tories.
Oh, right, yes.
It was a very detailed analysis about how you can leverage your vote to block certain Tories and cap May's power or take power away from May.
Yeah. But with regard to the French election, I mean, I did quite well out of the Sunday election, because middle and late last week I was selling options at very high implied volatility levels. So
Yeah.
when volatility increases, if you're an option seller, you collect more premium. And then of course, with the result, everybody's sort of done a thank God for that. Volatility collapses, you get a volatility crush. So I was able to buy back the options that I sold at a much cheaper price. And I think there's a potential for that to happen again May the 7th, which kind of makes it difficult if you're trying to get a directional bet, really, because you don't know which way the direction is going to go. Whereas when you sell options premium, it doesn't really matter too much if the volatility is so high. But either way, it's a bit of a binary event, even if people think they know what the result's going to be. Okay.
Well, let's leave it there, because it's gone 8 o'clock. I've been talking for quite a while, but that's really interesting, and I'm going to do some more work on this. And we must, as the week unfolds and we get close to the election, we must compare notes and exchange some more ideas on this.
Yeah.
Okay.
Good.
Any questions from anybody? They've all been very quiet.
We might have bored them silly.
They might not even be there. Might be logged in.
Dan's still awake.
Just yeah.
Well done, Dan.
So, were you going to say something else, Graham?
No, I was just thinking. I'm sort of been doing some scans for stocks that I think have come off the boil as a result of Brexit, and I'm looking to try and find those that had the sort of response, the opposite to what BP did, to try and filter out those stocks that are particularly susceptible to a movement in the pound.
We talked last. One stock we haven't looked at, because we talked about this last week, was Primark, ABF.
Oh, ABF, yeah. Oh, bloody! Oh, rabbit in the headlights on that one.
That's come up from under 25 to it's heading for 30, isn't it?
Yeah. Well, see, they should be a beneficiary of a stronger pound.
Yeah. But they've had so far a good 2.5 weeks.
Yeah. I mean, they had some company issues.
Right.
I kind of feel like I've missed the boat. But then when I look at the monthly chart, I feel like I haven't. So.
Obviously they're coming into they're getting close to the big 30, etc. But
I'd love a pullback to get in.
It's a bit of a spinning top today, so could do with some nice nasty news to drag this one back a bit, couldn't we?
Yeah.
Okay, well, we'll keep an eye on that. All right, thanks again, and I'll leave it there, but we'll come back to this and refine some ideas as well.
Okay.
Thanks
a lot. Good evening.
And catch you tomorrow.
Yep. Cheers.
Bye, guys.
Bye.